Investors and traders, welcome to the channel Market Chart Pattern. Today is 23rd of October 2024. Hope everyone is having a great day. This is going to be a short video. We will be covering the key US markets briefly. Just wanted to update you on the price action that we have been seeing recently. As always, this video is for educational purposes only and it is not a financial advice. So we start by taking a look at the US dollar. This is the daily chart. So the US dollar has been uh, getting stronger relentlessly, and you can see that ever since our target was met to the downside, it's just been going straight up. So we had this black ABCD which was completing around in this region, and then went a little bit lower, but there was a lot of structural support from coming in from December of last year, and then we were initially looking for a retracement right up to 102.25, but then the market had been a pause there for a couple of days, but the market has been really strong and it actually went right into this 50%, and now it's right at the 61.8% retracement of this 107 highs. So it's a really impressive move, and the US dollar has been very strong. I think if we just look back, we can see that last July we had a similar kind of move, which was very strong, and within that there were few pauses or very shallow pullbacks, and this kind of move appears to be quite similar in nature, but we'll have to wait and see. I think if it gets above the 61.8% retracement, then most likely it's gonna target this kind of region around here, very close to the 78.6% retracement. So it will basically be moving towards the top of the range. And if we just zoom out of it and take a look at this on the weekly chart, we can see that it has been going up for 1, 2, 3, 4 weeks, for 1 month, and this was the region we were watching for it to get into, and it's got plenty of support around here. So the chances are then it's likely to go and target 106, possibly around 107 as well. So upper boundary of this range, um, and right from 61.8% retracement, there is a chance maybe we get some sort of a pullback, but a very very strong move. It's only if it goes below on closing basis below 99 that the weakness in the US dollar will likely to continue, and it could actually decelerate to the downside really quickly, only if it begins to close below 99 and ideally 98. So this is what the US dollar is doing, and it's pretty strong. It's really interesting to see this. And if we just move over to the US treasuries and we take a look at the 2-year treasury note, what we can see is the yields have actually been rising. It completed our big target on the yield of 3.9%, went a little bit lower, and now it is back towards the 38.2% retracement. So the 2-year, which is towards the shorter end of the curve, the yields have been rising, but not as much as the kind of action that we see on the 10-year. So if we just move to a 10-year chart, so this is the yields for the 10-year, we can see that the move has been pretty strong to the upside in terms of the yields. At one point they were as low as 3.6%, and now they have gone to 4.25%. Now I'm gonna go and actually try to draw some retracement and see where we are. We are getting close to us towards the 61.8% retracement, which is around 4.3%. And if we do a retracement from the highs back there, and here we go. So we do have a confluence zone setting up around 4.3%. So in my opinion, this is gonna be a pretty strong resistance level and this is something that we'll be watching. But looks like 4.3% is what the 10-year treasury note is targeting. And if we just look at it on the 10-year 10-year futures chart, this is the what we see on the daily chart is, look, it completed its back big ABCD in blue, and this is when the 5th of August happened as well. So it went a little bit higher. This is where Fed came in, and they announced their um, half a basis point, so half a percentage point, 50 basis point cut, and this is the market has been just moving lower and lower and lower ever since. And the frustrating part is that we have had a number of really important pattern formations taking place. Key support levels, they were held for about a week or so, but trend line's broken, and it has just moved lower. I believe this trend line is actually not drawn correctly. The trend line is rather like this. So in my opinion, it's got a little bit lower to go, around 110 probably, and that's gonna match with that 4.3%. What we saw on the yield chart for the 10-year. You can see that it's just been coming down, down, and down. And yeah, it looks like what the market is trying to price in is that the Federal Reserve is likely to continue with their planned interest rate cuts, and probably this is something what they should be doing, because normally when Fed starts an easing cycle, it's because the economic data is indicating weakness. So perhaps recession might have already started, and in a few months we'll begin to hear that, okay, the recession started 3 months ago, etc. um, and I think the Fed is really closely watching the unemployment data very, very closely. But on the other hand, the bond market feels that the inflation situation is likely to come back, and maybe the bond market is also trying to make a political statement. Politics is something that we do not discuss on the channel, but the price action, if you look at the stock market has been making new all-time highs. S&P 500, the Dow Jones, and the bond market is actually moving lower. So perhaps it's indicating that the next U.S. presidential candidate likely to win might be someone with the policies of lower interest rates and tax cuts, which could actually cause the inflation to rise, perhaps. So maybe that is something which the bond market doesn't like, because it will have an impact on the ballooning deficit, for example. So I'm not going to go in further into that, but this is perhaps might be one of the interpretations. I have no idea what is likely to happen in terms of the politics. We just watch what happens in the markets. And if we move over to the 30 year, in 30 year, has the price action has been very disappointing in 30 years, and the reason is that look, this trend line, really nice trend line, has been broken to the downside. It also broke this nice pattern formation here as well. So this tells me there is a further downside in terms of the price, or in other words, the yields going further higher. Now I'm a little bit doubtful whether we were actually going to make this bigger ABCD in the longer end of the curve. We did that nicely in the 10-year, then we saw actually the 10-year roll lower, and I was of the opinion that we might be actually in the CD leg, but this retracement is actually getting pretty deep, and if we begin to actually move below 114 or 115, which is going to be the 61.8% retracement of this A point A here, then this possibly in start of an uptrend might just have been a retracement, and then it will be beginning to actually start to the trend to the downside, continue the trend to the downside. So this is what we are watching here in this one, and the TLT is similar kind of picture here. Trend line broken, but good to see that TLT actually closed a little bit to the positive side on the daily chart. Now let's move over to the stock indices, and let's start with S&P 500. So here we can see that the S&P 500 actually pulled back today. It was down at one point over 1%, but closed the day around a minus 0.92%, so very close to a percentage point. And it actually went into this entire region that we had been watching really carefully, met our target, and now because of the political uncertainty, I think the stocks are likely to be a little bit more choppy in these couple of weeks time, 2.5 weeks time perhaps. So I think today we have seen some of it, but also we had some economic data pending, home sales or some data which came out. So in response to that, we have seen this kind of action, but the reality is that the price was already telling us that we are at this really important point that we identified in advance. And then let's take a look at this in the futures chart, on the daily chart. Here we go. On the futures, we closed. Futures have been a little bit stronger. Actually, I think it's after the market closed, there was a bit of a rally, which was a good thing. And now what we are looking at is basically, you know, perhaps the market actually finds some support from here because it retraced right to the 61.8% retracement. So there is a chance that we could actually see this further rally to come in tomorrow. Now the interesting price action was in NASDAQ. NASDAQ has been in a trading range right in our box that we had identified. We saw a pullback and the market closed over 1%. But it has also done something really interesting in terms of the price action. Let me actually blow it over for you. And here we go. If we just draw this and we project it, so it also did an ABCD pattern right towards pretty much where the bottom was. Uh, so that's another development, and like the chances are, let me actually also draw the retracement here. You can see that it was also a 61.8% retracement, so it has a nice pattern like this which formed there. There we go. And the chances are that we might have seen a bottom perhaps in this one, and the market is actually likely to start to continue to move higher. And this pattern, we were watching for a completion of ABCD with the possibility of making new all-time highs. It's still there in NASDAQ. So as long as 23rd of October's low is held, the buy still remains, at least for it to go and tackle the top of the trading range right here. And then if we take a look at the Dow Jones Industrial, it has been pulling back from after meeting our target of 43,500 roughly. 43,640 was the exact number, but it came into this box. It's just pulled back a little bit, and it's actually, I think, believed to be have retraced also 61.8% retracement. Here we go. And yeah, I think as long as the market remains above 23rd of October's lows, the chances are it will go and test the upper part of this move. Now let's take a look at the Russell 2000. Is one of the weakest one, and here we can see that it's just also pulled back. In fact, it has been pulling back for a few days, but the retracement has been here we go, right at the 78.6% retracement. So that has been, here we go, a deeper. So this one is actually, in other words, weaker than some of the other indices. But also, as long as today's lows are held, I think it's just gonna retrace up a little bit. And let's also take a look at the NYA, which is New York Stock Exchange composite. Let's take a look at this one on the weekly chart because this is where we are watching it. And here we go. It also met this 1.618 expansion, came very close to it. I think exact number was 19,993, and it went to 19,905. So about roughly about 90 points off, but 90 points in a 20,000 point index, it's not a lot. And then the week is not over, but this is one of the first weeks that we are seeing some sort of a pullback develop. But yeah, it's also met at least one of our shorter term targets. The ABCD on this actually points towards 22,000. I don't think we are going to get there before the elections. So this is what we are looking at in terms of the markets. So thank you very much for watching the video. A really quick update in terms of the recent price action that we have seen. And thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.